Cool. All right. Well, welcome everybody. Welcome again. I'm going to actually be on the move while doing this. I'll be in a taxi at some point, but I'm sure that we've got lots and lots of questions. So put your requests up now. If you have reviewed the term sheet or you watched my video over on YouTube first, I covered the 7 different victories, compromises, and defeats that we have already had. And I'll also bring up other people. So we got Tony V as a speaker who can talk on the custody side, and we'll wait for other experts to come up as well who can talk about various other things. Okay, Azad, do you want to bring up the first person?
Yeah, let's bring up Velco, Prime Render.
Hi, can you hear me?
Yeah, can you hear you well?
Yeah, fantastic. First of all, Simon, I've been following you for the past few months, and the rest of you guys, and you really shone a light on a lot of problems and a lot of questions I had. So I'm sure that's the case with a lot of other creditors, and just having a little bit more certainty in these chaotic times really, comforts me, and I'm sure it comforts a lot of other people. So thank you so much for doing this. I have 2 questions which are kind of linked, and that is the relationship between the time that we have to decide how much of the crypto are we going to take out and how much are we going to invest in this NewCo versus the time that we will actually get this money into our hands. And I'm saying this because the crypto space is very volatile. So if we decide in March that we're going to accept a 50% haircut in dollars, and then by the time we get this amount, maybe in July or whenever, the crypto space explodes and our haircut becomes 90% because we are locked to a 19K crypto. So that's one question. And the other question is, what is the relationship? I'm still uncertain of this between the bull market and the bear market. And I'm saying this, for example, if crypto tanks and Bitcoin comes to 11,000, does this mean that we now, if we get a 50% haircut, we basically get our full amount back because we're locked into this 19K value of coin? All right, so I hope this makes sense. Thank you again, and
Yeah, great questions. I think those will be covered in definitive terms because I didn't catch any of those in the term sheet. So the calculation on exactly how they're going to be, for example, the 70% to the convenience class. Now, depending on how they're going to be doing the rebalancing, we didn't get any details on rebalancing or any of those important questions, unless I missed it. I read most of it, but there was a bit at the end which I haven't read yet, which I still need to go through. But yeah, those details are not given. But if I'm to guess how it's going to work, I believe that they will convert everything, if this plan gets accepted, into Bitcoin, ETH, and maybe they'll just leave the stables. I don't know why we would convert anything into stables. And then there will be, based upon you will have a percentage of the estate that you're entitled to. And based upon all the different settlements, we're not going to know that number until everyone votes and goes in a different direction. We'll then know how much is going to be divvied up between all the earn classes. The earn class, once all the other classes have reached their relative settlements. Now, in the convenience class, this is where the cram downs, crypto and Bitcoin can help us. So, for example, if they decided to create a convenience class in order to cram down a plan for us, and Bitcoin goes on a rampage, then if it's significantly higher, then in terms of crypto value, they will actually be able to buy less crypto. So, for example, if you're getting 70% of $1,000, and the crypto goes up, and then they got to buy back some Bitcoin, then that $700 will buy them less Bitcoin, which will turn a 70% recovery into maybe a 50% recovery or 40% recovery or 30% recovery if you're denominating your wealth in Bitcoin, for example. So that could work against them if they were using the convenience class as a cram down strategy. On the other side, on the flip side, they're going to be dollarizing, and then that dollarized will just really determine the percentage of the estate. And then how they're going to be dealing with all the different altcoins and stuff, we still don't know. In terms of the mining operation, by my limited information, and I still don't have the information that I need, but by what I've got and what I've seen, I estimate that the Bitcoin mining operation becomes a decent deal for us, with Bitcoin sustained over $25,000. So you have these different plays and these different things, and then we also don't have enough details on how management fees and which of the asset classes will qualify. So unfortunately, I still don't have enough information for you to get that. That's why I would hope to get a lot more information, so that we can really make those calculations and get the old get Keith and everybody doing some modeling.
Okay, next up is MC Hammer.
Hey Tone, did you have anything on that or not really?
No, not really. The only thing I will say is they talk about everything in dollar terms, so I would imagine they're gonna just dollarize it as of the petition date. It seems like that's the route they're going, so I would imagine that's probably how they're gonna stick to it.
Yeah, it's definitely going to be dollarized, but then in kind just means that they'll use the dollar value to purchase the equivalent amount, I think.
Right. So let's say you have one Bitcoin and you're gonna get back whatever, let's say 50%. You would imagine as you're getting 0.5 Bitcoin, but in reality, it's going to be one Bitcoin, 0.5 times the 20,000, whatever the price was of Bitcoin, and then you're going to have to divide that by today's price. So you'll end up getting like 0.4, 0.45 instead of the 0.5 Bitcoin at a 50% haircut. So you'll definitely get less.
Yep. Okay, who's next, Azad?
MC Hammer, are you there?
I am here. I was wondering, doesn't it make sense that if the convenience class is left to stand as a class, that they're going to be really the only vote that is going to count in whether or not the plan gets accepted, just because of the way the numbers work? And I also was wondering, there are a lot of attorneys who accept cases on a contingency fee basis, including a lot of people who are trying to sue Celsius-related companies in class action suits. And of course, there's other well-known types of cases like injury cases, that sort of thing, who accept contingency fees. So I'm just wondering if it might be possible to try and get an attorney to work on that sort of a basis in the future in order to go after bad actors in the litigation trust. Thank you.
Yeah, so on the whole cram-down stuff, so as we said, it was defined in the term sheet 15 different classes, and convenience class was only one of them. So if any of the, like, for example, if 14 of the classes, I mean, a bunch of them may not have any vote, like, preference shares and various other things. But they defined all these different classes in there. If all of them vote no and then one of them vote yes, that's when you're in the situation. And if it was the convenience class, because they're getting the best deal, where they could cram down the plan, and so they could become a very important vote in that sense. That's where crypto increasing in value could work against, because the convenience class based upon crypto going up could end up with a worse recovery, if they're thinking in terms of, beyond stables and just crypto to crypto type of thing. So it's not a slam dunk, but it's definitely something that's been tried to be used there as well. So yeah, it is important, and that will certainly factor into the equation. For now, I think everybody, if we can all get a better deal and a plan that the majority want, that's always a good thing. But I think it's Tone that always pointed out that this whole thing about equality and bankruptcy is actually a pile of BS, because all they do is they just start creating different classes, and then we end up with a class system, and a class system within the bankruptcy court. So it's quite ironic that. In terms of, I'd love to have a lawyer that would work similar to a fund manager based upon profit and, a 2 and 20 or something like that. I don't think White and Case will do that, but I'd love to see a competitive market opening up for that litigation trust. We've paid for all of the advisors at the UCC, and so hopefully that can all just be transferred to the law firm within a competitive market. I think that should be done via a similar type of auctioning process as well, so that we can try and get the best terms there, but also get the level and quality of law firm that can actually get the result, but also not just think in terms of spending like they are in Chapter 11, think in terms of profitability, because my biggest complaint against Chapter 11 is that the lawyers are not aligned with the rest of the parties and players. So I'd love for that alignment to happen. And that's what I think the key thing to this whole term sheet is. If we can get all of the parties all in line, then we can create something awesome together. If we're working against each other, and it serves one particular party getting paid unfairly, then you're still in Chapter 11. And I don't want this to be another Chapter 11.
Exactly. That would be really great. I mean, they might be able to limit it to some sort of a percentage of the recovery, and then their fee would be based on results instead of burning up billable hours. And I don't know how how in the world the other classes that are that the creditors are divvied into might be able to control this whole thing if their numbers are very low, or the amount they have on the platform is very low. I mean, it seems pretty arbitrary.
Yeah, well, there's two factors, isn't it? There's the number of people, so the number of people that vote in each class, and then the dollar value of what they vote in each class. And for the convenience class, if there's a bunch of people with dust voting, they also defined quite a lot of the classes as non-voting. So, for example, the disqualified sell class, they created one of those, which was obviously the likes of Machinski's sell tokens and that type of stuff, which would be disqualified from voting. Cool. Okay, thank you.
Thank you very much.
Okay, next up is...
Also, I want to put the disclaimer. It continues from the YouTube. I'm not a lawyer, not a tax advisor. And if there's any financial impact, don't treat it as financial advice.
Okay, next up is forgotten earned creditors.
Hey, thanks for having me up.
Nice name. We definitely are forgotten. We're always everyone's trying to chip away at the earn.
Yeah, exactly. And that's exactly my point, is I feel like a lot of items haven't been discussed related to earn. So I have a lot of items, but I'd like to discuss two items quickly. And the first is the convenience class. We believe it's a gerrymandering of the vote, and that there could possibly be a legal battle as a result of that. And that there is a legal argument for that. And that it needs to be more fair and equitable, and that the convenience class was made up. It has nothing to do with Celsius. If it's more fair, it's okay. But if you're bribing people with the funds of victims, we're going to have a problem with that. And the second thing is the petition date pricing. We're not liquidating the accounts. So we believe the account balances should be transferred to the NewCo, get equity based on account balances. And the reason for that is we're already getting a massive haircut immediately just as a result of using the petition date. We also believe that it's a dangerous precedent to set for the crypto industry in general to be using dollarized claims rather than crypto in kind. So those are two items that I just wanted to discuss really quick. And then thirdly, if there is an opportunity for creditors to be involved in the negotiations, I personally believe that someone that has been deeply affected or have had their lives ruined as a result of this should be involved in the negotiations rather than, just the random influencers we mostly see involved in the negotiations. Thank you for your time.
All right, awesome. These are all really good points. I'll just leave them there rather than commenting on them. Thanks. And if anyone does will just want to voice, things that concern them or things they'd like to see changed in the plan, then this is an ideal forum to do that, because I believe everyone who's anyone in this case will be listening. So thank you very much.
If I could just jump in on the last part, I don't want to be the one that's constantly throwing out the negative, but we're in bankruptcy, right? This isn't a crypto judge. This is a United States bankruptcy judge. He doesn't care about what happens to the crypto industry. It's not his responsibility. It's not his job. His job is only to follow the law and to make sure that whatever happens in this bankruptcy court doesn't get overturned. So he's going to follow the law, and the law isn't crypto friendly. So if you want changes, you got to talk to your congressmen, your senators. If you have Biden's phone number, give him a call. But the judge is not going to do any of these things. He's going to follow the law, and we have to just kind of figure out a way around it. But we're not going to change it. It's not going to happen.
Yeah, it's not law reform. I was involved in law reform, which was the Jobs Act, and that was a 5-year process. So I don't think we want to be in Chapter 11 for 5 years. And if you want to know how to get hold of Biden, shout out to Tiffany Fong.
Hello. Okay, next up is Ramsey.
Hey guys, hope everyone's doing well. Did I see something, Simon, that you posted that said pure custody is now 100% instead of 94? Or was that Tony maybe?
Oh, Tony, do you want to take that one?
So part of the settlement with the debtors and the UCC is that the 6% shortfall for the pure custody, they're going to waive it. Basically, they're going to stop fighting over it. It doesn't take into effect now. The only way it takes into effect is if the judge approves our settlement. Based on the timeline of the courts, he's going to be able to hear it on March, I think, the 21st. And then assuming he agrees to it on that day, you're looking at probably early to mid-April, which is when you'll be able to get the other 6%. And we'll...
Tony, do you know what that's worth in dollars, roughly?
$3 million. About what Kirkland Ellis bills,
every month. Or half month, I should say.
Yeah, but they're also waiving the loan provision. That's part of the settlement as well. So right now, if you have an active loan and you're in pure custody, you won't be able to withdraw. But once the settlement takes place, as long as your loan is in good standing, and we define that as under 80% loan to value, you'll be able to withdraw your pure custody. And on the chance that your loan is above 80%, which currently no one's even close to it, they said, if your loan is, let's say, 81%, they'll withhold a certain amount of your pure custody to get it under the 80% threshold. But again, that's going to be in like April.
Yeah, I never had a loan. I was just in the pure custody part. Sad thing is, I just looked back and I actually joined Celsius at the end of March. So close, man. But
yeah, so you'll be able to withdraw 94% today, and
oh yeah, that's already on my ledger and gone, man. Forget it.
Okay, good. Get it out as quickly as.
Oh, you done it? You got it out?
Yeah, it worked like a couple hours ago. Actually,
that must have been like the most satisfying transaction in history, right?
I still have some locked up in Earn, so it was a relief for sure. Like it was like a moment, but still got to win this battle.
How did the Celsius app function? Did you have to like change anything? Did you have a new 2FA, or like did it all just work as usual?
Same code from the Authenticator app, like when it changes. I had to do the KYC, but no, I just changed my whitelisted addresses and took it off. That was it. Self custody, baby. That's it.
Yeah.
But yeah, no. Hopefully, I mean, now we just gotta wait for the rest. I guess that's it.
Thank you, Ramsey. Next speaker is Alexander.
Hello, everybody. I'm also in the car, so I hope you can hear me, Simon. Simon, I saw your video, and first I wanted to say, I mean, you've been 12 years now in the space, and I think we both can agree that the space did you a lot of good things. And we also know all your relationship to Machinski and all this stuff. I'm mentioning all that because I would like to know, will you go and settle your claim, these 289 Bitcoins? Or can you kind of progress a little bit on that? Because when you will fight it, right, it will hurt us even more. I understand that this was not correct, and you're probably not even 21. You're probably under the top 10 or top 15. But how you will progress with this? Because on one side, right, the community figured that out, also probably with different intentions. And you also stated that at your current point in time, it does not is that much of your wealth anymore. So I would just like to know what must come through that you settle that instead of suing it or suing Machinski for criminal charges with your own money. Thank you.
Oh yeah, I mean, from my perspective, I love you all, but those 289 Bitcoins are mine. And so they need to be haircutted like everyone else and treated like everyone else. But I'll do what I need to do because I respect Bitcoin. I believe that they're going to be worth a lot of money in the future. And if it turns out that this is what we need in order to get is it tough justice or rough justice that Keith uses? Rough justice to Machinski, then so be it. If we enter into a settlement, I think it's going that way. I think Kirkland know that it's deeply wrong and it's very, very problematic because that's just literally taking Bitcoin and issuing no loan. That's a big problem.
Yeah, plus the only guy that Alex Machinski has gone on his spaces and said F you to is the guy who had that happen. So it's a little fishy, let's just say.
Thanks, Alex.
Yeah, thank you.
Thanks, Alex. Let's bring up Lawrence.
Hello, everybody. Simon, I've taken some liberties. I reached out to 2 different law firms. One of them, Bracewell in New York City, they're checking on conflicts. And the other one's a little bit more interesting because they claim to be the #1 law firm in cryptocurrency and in the Supreme Court, Lowenstein. Again, they're checking for conflicts. So just based on the fact that they're even interested in checking, the second firm would consider a contingency basis, I've been led to believe, on this type of litigation. I've given them links to the most current information from Aaron, from you, and I've expressed to them the points that I believe are the group's most concerning. And I'll keep you posted if they're interested in speaking at the appropriate time. I'd be more than happy to invite them or speak to them and how to move forward collectively as a group, hopefully being able to unite all of the different groups as one. Thank you.
Awesome work, Lawrence. Yeah, we should, if we can find great law firms that are looking to take on the litigation trust business and are willing to work on contingency and have the pulling power, like you said, then that's great work. Yeah, that's amazing. That should definitely be a competitive tender process. That shouldn't be a slam dunk for one law firm.
Like I said, I've reached out to the first 2. I've reached out to some others that are more senior in this arena, and they've written books and retired and have health concerns. But these two are the first two that said they'd be interested and that they would check on conflicts. Like I said, the first one, Bracewell, I really don't know that much about him, but the second one is, I was led to believe, and both of these are very high tier litigation in New York City with tremendous successes in these courts. So we'll keep you posted. Thank you again.
Great, cool. Yeah, and there was a bit more color, but not full color. So the litigation trust, it was talking a bit about structuring, like there's going to be a committee, but I didn't get too deep into that one. I was more focused on other parts, but I'll update you as I get to the final parts of the terms.
Okay, thanks, Lawrence. Next speaker is Thibault. Thibault, are you there? I guess not. Yep, we haven't got any more speakers, so if there's anyone else who'd like to ask a question, please raise your hand, and we'll put you on as a speaker. I think, Thibault, can you hear us? Nope, they've gone.
Simon, all of these settlements, it sounds like they want everybody to sign off. Is that mandatory, that if you accept the reduction, if you accept in order to move forward, you have to agree not to? I mean, am I wrong in that understanding?
Yeah, let me give you my understanding, but not legal advice, and maybe Tone knows a bit more as well. So let's say, custody have a settlement agreement, then there's no way they can force you into it. It would be voluntary, but you'd probably end up with a claim. If you didn't settle, then you'd end up with a claim against a NewCo that's about to close, and you'd have to file a motion to object in the Chapter 11 process, or you'd need to launch some kind of class action or something against a company that's closing. So yeah, I don't believe you can be forced into it, but you should get legal advice if you don't want to sign those settlements and see what your options are. Do you know anything about how it works, Tony?
So for this custody portion, you're not required to agree the settlement, but if you decline the offer, then your custody balance is put in escrow, and the litigation trust will have to sue you to figure out what they're going to do. So they can elect to not sue you, and then you'll get 100%, or they can elect to sue you, and then whatever happens in the courts is what you're going to have to, live with, basically. But if you
My question was more your rights. Your rights, Tony. Do you give up?
Yeah.
Do you have to give up all of your rights when you sign away?
So when you agree to settle, you basically agree to vote your claim as a yes on this plan. Your custody portion of the claim as a yes to the reorg plan.
Even if you disagree with points on the other points on the plan.
Well, if you're not in those other points, then you don't really have a say. But if you have an earned claim, then you can vote your earned claim no, but you can vote your custody claim yes.
Yeah, the idea, Lawrence, is they want everyone to settle and agree to the plan. So they're gonna put as many things that will get you to agree to the plan to compromise on the things you don't necessarily care about. So yeah, the idea is if you can't just take one bit of the plan, you have to agree to the whole plan.
For the claim. So for your class, basically, you're voting with your custody class, you're voting with your earn class, you're voting with your borrow class. You can vote yes for custody, no for earn, and no for loans if that's how you feel. But if the custody class approves it, then the plan will probably get approved.
But you'd have to be in custody or loan to get a vote, right?
So you're voting based on your voting rights in that class. And if you're not in the class, then you have no rights to that class.
And as we said, they're bribing you with preferences. So if you've got clawback exposure, they're going to use that as the mechanism for you reducing your clawback exposure.
Also, from what a few attorneys have told me, they didn't necessarily have to give us that number. So they could have just convinced us to vote for it and then not giving us the thresholds. So I guess it's actually a very nice thing that that they did that.
Okay, let's try Tebow again.
I appreciate it. Thank you. Is that working now? Can you guys hear me?
Yeah, we can hear you now, Tebow.
Okay. I just had a quick question because it took me that long to understand the concept. When you say in-kind crypto versus dollarized crypto, it essentially means the same as they are going to give you in-kind based on dollar value at bankruptcy date. Is that correct?
Yeah, so in kind is kind of meaningless because it just is the convenience of being in the same currency, but it doesn't mean it's it doesn't mean it's a 50% of a Bitcoin if you're getting a 50% haircut. It just means that if you had $1,000, then you're going to get $500 worth of Bitcoin, and they may need to buy the Bitcoin when they rebalance, and so you may end up with less Bitcoin. And it was really complex in the Voyager case, and so yeah, we haven't got that equation yet, but they put like a whole volume weighted average price equation.
I see. Well, thank you. It took me 6 months to understand how much more fucked I am, but I appreciate it. Thanks for the help, Simon. Appreciate it.
Okay, no worries. Well, Bitcoin the crypto market may still crash. You know, Binance may have another flywheel, and then that may work in our favor. You never know what's going to happen.
Yeah, true. I think for people that like you or me that have most of their assets in BTC or ETH, I was understanding that because we're not short ETH as much as BTC, it would be less of a haircut. It seems like it's essentially all based on the bankruptcy date, which for ETH I believe is at 1100 and BTC something around 20K.
Yeah, and again, this isn't actually confirmed. It wasn't in the term sheet, so we'll see in definitive.
And is it confirmed that they will not be able to take a performance fee on the crypto swing and actually a volume of portfolio that is based on coin, not based on dollar value?
No, so what they said is there's going to be qualifying assets in the NewCo and non-qualifying assets, but they didn't define which ones to be non-qualifying. I'm hoping that they're going to make staked ETH non-qualifying assets for the performance fee. Maybe they listen to some of our feedback there.
Okay, and any mention of the fork from ETH that happened during bankruptcy?
The fork, what the proof of work ETH?
Yeah.
Yeah, I haven't heard anything about that. There should be in theory. So most of it, I know they had some ETH and some Lido staked ETH, and Lido staked ETH made an announcement that they're not paying out the hard fork, but it exists, so it exists somewhere. So I don't know that could lead to litigation for them in the future. I'm not sure what's going to happen there. Litigation of a smart contract. We'll see if code's law then. Yeah, the ETH that they had, they will have proof of work ETH. So I think I don't know. They did have. I mean, most of the hard forks they took in the term sheet that hard forks go to the rightful owners, which is a complete conflict, by the way. I think the court got that completely wrong, because if the coins belong to the estate, then the hard forks belong to the estate, which should be shared equally amongst all. But then they decided to use the terms and conditions, even though they said the coins belong to the estate, like it was custody, and then give it to each person one by one, which to me, that's a complete conflict. But I'm not sure if it's a material value, these hard forks.
All right. Well, I appreciate your answers and hard work. Was a valuable lesson, worthy of the money lost, but thank you anyways.
Okay, thank you.
Thanks a lot, Tebow. Okay, we've got about 15 people who'd like to ask you a question, Simon. So we're going to ask for one question per person for now. Thanks. So let's bring up, in no particular order, I'll try my best to get the right order. Let's bring up Crypto Girl.
Okay, thank you, guys. Yes, I want to piggyback on that ETH issue because, Simon, you've had all this success getting the stalking horse. How about really trying to get the staked ETH so that it can be distributed to us? I saw today that 28 billion is going to be unlocked. So that's definitely going to be happening. And if you think, they said in their presentation that they got a debt-free mining operation, which was so unusual in the industry. So they've got that huge bonus of the debt-free mining. We should have the liquid ETH. We should be staking it ourselves. I think we should really fight for that. And get that put into the terms, because to me it looks like earn, they haven't disclosed the percentage, general earn are just going to get the scraps once everybody else has been paid off, including these employees that need their own counsel. And I don't know why that wasn't covered by the work of Kirkland and Ellis, because they're all part of the debtors company. But there's going to be so many bites out of the pie. I don't know what pie will be left for general earn.
Yeah, that's my big bee in my bonnet next, is getting back the staked ETH. That's the one I'll definitely be pushing for, because I don't consider that an illiquid asset. I don't mind receiving staked ETH in lieu of ETH. And I certainly don't want to pay a performance fee on either the income or the capital appreciation. I don't. I don't see that as a legitimate fee, but I know that is a big part of the plan, and that's how they want to, manage the loan book. So that's a big part of what their plan is. So the only way we get these things is by ensuring that we open up the process through the stalking horse to other groups of people that can put together different terms, and then we can enter into a competitive market.
Yeah, but the thing is, if they don't do that, how will we ever recover our ETH? Because there's no clarity on how our actual crypto will be made whole with these tokens. Are they going to pay us out slowly over 5 years? Do they plan in 5 years that everybody will be made whole? Are they that ambitious? Because I'm not seeing.
Oh, so there's yeah, so I'll cover. You've got some really good points. I do like keep going with all your stuff, and I'll comment on them as they go, because you tend to come up with like 4 really good points, and then I forget the first 3. But the model that they're going for is obviously it's income. It's mainly income through Bitcoin mining, loans renegotiation, and staking, and they call it a staking business. There's some bits that I find really conflicting, and even after the Nova Wolf AMA, I still can't get my head around. One of them is they said it's not a fund. Don't call it a fund. It's an operating company. I've never invested in an operating company where they charge a performance fee, and I can't imagine investing in a company and then they give a performance fee. It's either a fund or it's an operating company. And imagine being the CEO of an operating company that pays you a performance fee at the same time. I'll take that terms. Those are pretty damn good terms. Normally, when I run Bank to the Future, I have to drive it to exit in order to be considered a success and pay out some dividends. And then I get a reward as a shareholder rather than actually getting a performance fee of managing the investments at the same time as saying it's an operating company. So I can't quite square that. Maybe I've missed something. But to me, but the way they presented it on the call was like they're all going to be focused on this operating company. But they also, in the term sheet, it stated that there will be a board, and that board will have the 5 seats with UCC involvement, 2 just by the UCC, 3 by Nova Wolf and UCC, and 2 by Nova Wolf. And they're going to determine a dividend policy. So there'll be, a strategy, and one of them will be the dividend policy. If I were managing such a thing, I think the right way to do this is make growth a bonus, but income a priority. And the reason I say that is because normally, I separate my income investments and my growth investments. But for me, this was a growth investment because it was just taking out a loan with some Bitcoin. But for the vast majority, everyone was there for the yield, especially the earn people. And so I think we need to prioritize not betting everything on this huge successful growth story, but drawing out as much income for everybody as possible, given that it really is set up as an income play. And so I think the dividend policy should be, maybe we can bring back the Machinski method, the 80-20, but this time do it under full audit, and actually generate the yield and actually be transparent about it. But I think something along the lines of, real profitability calculations. I still don't have enough information on the mining to know. I just don't have that information. It's so conflicting, the information. I just want to see like a riot style cash flow for the Bitcoin mining operation, but you're so right when they say is debt free is awesome, but whose debt did they wipe out?
Yeah.
The debt they owe to us. It's us. So our debt got wiped out. So now the mining is debt free. So there should be a high percentage of those Bitcoins that come to creditors as fast as possible, just in case the whole thing blows up. And mining is way more profitable the earlier you put the machines on. And then when we did our mining fund, it was like the vast majority of all the money was made in the first 6 months. And then you have this long tail where the dividends were just getting smaller and smaller and smaller until we could no longer compete, and it was no longer profitable because we didn't have the latest equipment.
Okay, yeah. As I said, we've got quite a few people who want to come up as speakers. So if we can just limit it to one question for now. So let's just bring up Marco V.
Yeah, hey Simon, earned customer creditor here. Trying to understand that proposal that they put forward. As it's written, how would you utilize the toggle? Would you adjust it where you get more crypto, or other way around? And who on
Then you
earth?
toggle.
Or they said there's going to be some type of slide where you can get more crypto, or more of your crypto back versus equity, or vice versa. And they said they would match it up with people who want to buy more equity, which I didn't understand. Is that how you mentioned it?
Yeah. So once you're in earn, like let's say you're going to get 30% up front and 70% in. Well, it's not accurate to say 70% in equity, but you get 30% up front and then your share of equity. And the equity is designed to try and fill the hole by income and growth. And there's a big, it's more like 10 or 20% initially, depending on the net asset value. They kept saying $2 billion of assets. I'd be interesting to see those calculations, but it will be done by a proper auditor, and I have no reason to disbelieve the way they do that. So you'll have your percentage up front, and then of that 30%, you might say, well, probably everyone will say, I'd like to get up to 50%. So then you'll just have, very few people that will probably want the equity, and everyone that will want more coins. If they do something like take all of our staked ETH into the NewCo, whereas if they create a really compelling plan and they give us as much of our liquid crypto back as possible, if I think it's a great plan, then I'm more than happy to put 100% into equity. But at this stage, I just want my Bitcoin. I don't see a plan that's going to outperform Bitcoin yet. So everyone, I think, is going to want as much of the liquid back. And then there'll probably be no one that says I want equity, but unless it's the strength of the plan. So if we cooperatively work on a stalking horse and we get the best plan, then there'll be some people that will want more equity, but then they'll probably just be able to buy it on the secondary market, because that will probably dump a lot harder than buying it in the initial. Kind of like an IPO, it's always the worst trade to buy in the IPO. So I'm not sure how successful that's going to be, but that's what they're trying to do there.
Okay, thanks. Let's try Joe. Joe, can you hear us?
Yes. Hey guys. Simon,
Hey, Joe.
I'm wondering who in the U.S., which companies have the equivalent licenses to figure that, can do the same securitized loans, to lenders, borrowers, people that want to deposit coins or assets onto a platform and earn yield. I think Nova Wolf is a real player. They're super sophisticated. They're very capable. They clearly have a real business plan. But they're investment bankers, and at the end of the day, there's a reason why they haven't disclosed a simple range of numbers of what earned customers can get back. They're trying to keep as much in the estate as possible, and I just feel like earned customers are getting sliced and diced and funding everything. And at the end of the day, there's just not going to be that much liquid crypto left to go around. I don't know if you saw that they're even now, Rob Christensen had emailed Kirkland and Ellis asking if somebody in the 90-day period had deposited more coins than they withdrew, would they be subject to clawbacks? And even there, the response was that, another way to slice and dice earn, that really had no knowledge of what was going on, but clearly we left the coins on the platform, deposited more than we withdrew, but still would be subject to clawbacks on whatever amount was withdrawn. I just feel like it's just not adding up for earned customers. And if there's a way to put something together that's more balanced for everybody to get equity and everybody to be able to stay on the platform, we should definitely use the fact that it's a stalking horse bid with Nova Wolf and see if there's a way to put something together that's better for creditors.
Yeah, so there's two ways of taking on the lending business in the US. One is to have state-by-state lending licenses. So if you want full exposure, the whole 52 separate state licenses. The other way is to have a bank charter, and that bank charter could be either a state bank charter. There's actually a creditor that's got the appropriate licenses that we were working with in our bid, or you can have a federal level bank charter. So if any company that has that, ABRA has pretty high lending licenses coverage from what I know. Full disclosure, I'm a shareholder in ABRA. And then you have the international side. So ABRA has I think one of those virtual asset service providers or lending licenses for the international side. That's what you're looking for. But to be able to issue loans, you're either looking for a bank charter or those state-by-state money, not money transmitters. That would be for custody and trading. But for lending, those state... I can't think of another crypto lending company that's actually got it right now. It seems like... and then, Salt obviously had... what they had that when we tried to execute the acquisition is that they had most of the lending licenses, and then they were also a public reporting company, so they already had that requirement. So that's why we tried to bring that in to service the loans. So I think you got Salt, ABRA, and then any of the bank charters. But really, Centerview should be doing, they reached out to 130, so they should have a fully comprehensive list. And then any TradFi players. But my concern about TradFi is just tech. The Nova Wolf and Figure team are great, but the tech is, to deal with crypto-backed margin loans, you got to have some serious battle-tested tech. You can't just put 23,000 loans into startup technology.
I think Joe, did you have a point to raise on the question that you asked, or?
Sorry, I got disconnected there. I'll just listen.
Okay, cool. All right, so let's bring up the next speaker. Let's go with High Lux Level.
Yes, hi. During the stalking horse process, can a bidder bid on just one part of the business, such as ABRA for loans, And if so, which entity decides if that bid is better than, say, the figure bid for loans?
Yeah, no, I don't think they can, and that's the issue. So one of the things we've been working on is putting together all the parties, which I feel is the job of the UCC. I think the UCC should put together a competing stalking horse, plugging together. But at the same time, I'm not leaving that to chance. So I've been working on, and a group of people have been working on, plugging together. You need basically to pull this off. You need a securities broker dealer with an ATS. You've got Securitize, you've got INX, you've got T0 that have different models. Then you need the lending side. So ABRA's got the lending side with all the lending licenses, both state by state and international. And then NovaWall for using a state chartered bank for the custody stroke money transmitter side. And those are you can custody. There's services you can use there, and then you want a top miner. So TerraWolf is an experienced miner, but there are miners that I know were in this process that have mined significantly more of the hash power. I know a couple that literally control hash power 20% of the Bitcoin mining network, and I'd love to see you need to plug them together. So that is the challenge. If you think that, I don't think they're going to come in and say, I think that's why Nova Wolf won, because they plugged together all of the parts of the infrastructure. So I don't think Abra can win on their own unless you connect all of the different parties, because you're going to have all of these different parts of the term sheet, and then the investment bank, Centerview, are going to have to analyze, which one is more value maximizing. And obviously Nova Wolf have got put together their model of what makes profit for them and what they consider a good deal to take all the risk that they're taking of engaging in this process. And I think they won't probably compromise on one of their parties. I think they'll keep it like that. So I don't think you can have one piece. You've got to put together the whole piece.
Okay, Simon, if you're able to get Mary set up as a co-host, whilst I bring up Natty. Natty, you're the next speaker, please. One question, please. Thank you. Okay, if it's not Natty, let's move over to Shirley. Shirley, can you hear us?
Yes.
Your question, please.
Yes, I want to know when my assets were moved into the earn category, because they weren't in earn to begin with. I had some in custody, and then I had some USDC. When did that happen?
So are you accredited or non-accredited?
Non-accredited.
Okay. And did you ever receive interest on your deposit?
No.
When did you deposit? Was it within the 90 days prior to the bankruptcy?
No, I had it before that.
So that doesn't quite add up. If you check your account, because the custody service was only created 90 days prior to the bankruptcy, when securities regulators said that they can't offer these securities. So everyone prior to that was in earn. And so if you look at your account and just look at the transaction history, if you received on a Monday any funds, then you were probably in earn, and you may not have you probably may not have known it. But there was no custody service prior to I think 89 days before the petition date.
Okay, so everybody was in earn before that.
Yes, correct.
Okay, so what can I expect to get? All of this talk, and nobody has ever mentioned what the people in earn are going to get.
Exactly, yes. The reason for that is because they're negotiating with a bunch of parties, and they're going to settle, and if some of those accept those funds, it's going to reduce the amount that Earn receives. So until they put people through the voting process, it's very hard to estimate exactly, because you don't know what actions people are going to take. For example, you could opt from the Earn class to the convenience class and give up some of your claim. And then some people might not settle their custody because they want to continue to try and fight for 100%, and others might just settle. And then you've got the fact that they're going to, I'd love to give you a simple answer, but unfortunately it's complex. But I can tell you, the second we can figure it out, we'll make sure that we put that information out there.
Okay, so what was it that was? Some people said they got some money back.
Yeah. So if you were below a certain amount, I think it was like 7,500, and you deposited straight to custody. I can't quite remember, it's so long ago, the exact rules. Then, but it would have been. Hold on, what's his pure custody? Tony, what's pure custody? Remind me again.
So pure, there's two people that were allowed to withdraw today. There's the ones that are pure custody, meaning you deposited funds into the custody wallet, it never touched Earn. And there's the transferred custody under $7,575. So if you had money in Earn and you withdrew it into the custody account, as long as that amount was under the threshold of $7,575, then it's exempt from clawbacks, so you would be able to withdraw it today.
Yeah, I think based upon what you said, I think you were in Earn. And if you're non-accredited, you would have been moved over to custody. Is that correct, Tone?
Yes.
Depending on your
Yeah,
state.
so if you deposited it after the custody wallet was created, it would have been pure custody, and you would have gotten an email this morning that you can withdraw some of it.
Okay, so that's a simple way to know. Check your email. They would have emailed you.
Yeah, they emailed people saying, I forget the actual terminology, but something along the lines of, you might be eligible to withdraw, and then you can log into your app. You have to make sure your KYC is up to date, and you have to renew your whitelist. Whitelisted address, and then you can just hit max, and it'll allow you to withdraw the max amount that you're eligible to withdraw.
I'm assuming they force you into a settlement contract in the way.
No,
in the app.
No, because you're not technically part of the estate, so it doesn't matter. You don't have.
Oh, it's your money. Yeah. Okay. It's your keys and it's your coins.
Okay, I'll hand over the torch to Mary. You can continue with the co-hosting. But before I do go, if you haven't subscribed to Simon's YouTube channel, please do. It's youtube.com/@SimonDixon21.
Thanks, Azad. Always representing.
Thank you, Azad. Nati is on the stage.
Yep, I'm here now. Okay, hello everybody. Hello Simon. Thank you, Azad. Just one thing I noticed in the term sheet is the stake is reward belong to the NewCo. So that doesn't tell me that their business model of growth and operating is to give dividend to the ETS holders. And that's
I love it. They call it a staking business. We're giving you our stake deed. A staking business means you stake for us and you give like a
fee,
a 20% fee, like Kraken or something.
Yeah, clearly. But
now this is a stake business means give us your ETH and we'll charge a performance fee on your ETH and pay you out some dividends as income comes in.
And this is crazy. So clearly this is written. The stake is reward belong to the NewCo. Crazy. There was a non-responsibility clause, like if anything go wrong in the valuation or whatever, the manager is not responsible. And that's it. I'm looking forward for negotiation because I feel we are going to get cooked on 8th of March. They get the extension to file the final disclosure statement end of March. And so the only way is that the bid have been extended. So there may be some bidders that do better offers, but we are kept in the dark. We only know that if the extension is finished. So I don't
No,
I don't see
I
any
think we're going to be able
improvement.
to change that one. I think we're going to be able to change that one. I'll hopefully announce something by next week, but I'm negotiating a way for that to change.
Well, that's
Okay.
that's the whole business model. That's why they're converting the loan collateral to staked ETH, because even when it becomes liquid, they're going to say it already has a purpose. It's been used as collateral, so they're going to continue to stake it, continue to earn the rewards themselves, and then use that to pay out the dividends, saying like this is the revenue we created. That's
Yes.
loans. That's the problem with loans. They want to take the collateral that is benchmarked for the loan people and swap it out with staked ETH so that they have an excuse to hold on to this ETH for 5 years. They have a cash cow for 5 years. I think it's like 500 or 600 million worth of staked ETH at 5% annually. That's a ton of money that they're going to have to do no work on to get that income.
Easy money. So on the loan part, for example, in this term sheet, there is no improvement.
No, it's a serious skill. It's a serious skill, like staking ETH. You know, it's a really hard thing to do.
Even Vitalik does not stake his. Too easy. No, it's crazy. So there is no improvement basically in besides the threshold of clawbacks and whatever. There is no negotiation improvement which happened. Did you notice anything?
Well, Stalking Horse was all I noticed.
Sure.
But
This is
yeah,
the big
most things
thing.
were the same.
Yeah, most things are the same.
But no, I'm confident. You know, having spoken to Kirk and Ellis, that there is going to be an iterative process, and we are going to be able to improve upon that. And it's really important that we get some others in as well.
So to finish that, because I consider that you are a mediator in this process now, supporting the creditor. Bank to the Future or yourself are not going to be involved in bidding anymore. Can you confirm that, or this is a wrong assumption?
Yeah, I think I add more value because when Bank to the Future was in the process, I think the conflicts made people very skeptical of me. I think I'd rather just stay as a creditor and try and mediate between more US first businesses I think, you know, I wouldn't want us to slow down the process because we're not a US business first. And so I'd rather just stay on the sides of creditors and I think I'm finding it more enjoyable being in this place than where I was before. So, you know, remove those conflicts, and there's good US companies out there that are more likely to get through the US process.
That's fine. Okay, we will see that. And to finish that and give the mic to the next speaker, are you ready to beta test the ATS equity token exchange? Are you happy with that? To be a wolf beta tester?
Yeah, I've already started the beta testing, and I couldn't find any tokens on the Provenance blockchain, so I had to send in an ACH transfer, and then they contacted my accountant, and they in order to verify my net worth, and then you do an ACH, and then maybe it lets you buy some hash tokens so you can pay some gas fees, and then that you send some ACH in, and then it mints through a bank deposit some stable coin that's not tradable anywhere else, and then you might be able to buy some tokens.
I'm going to say it because this is one other important point I have noticed in the term sheet is the hash token. So there is the sponsor contribution to the plan, how much money, fresh money they chip in. It's $45 million US. Okay, nice. And
sorry, please don't tell me it's 45 million of hash. You're not about to say that, are you?
Nah, No, and there is somewhere in the term sheet, because I've looked for, there is some hash token mention. You remember the leak plan of Wolf? There is this some like 400 million hash token will be contributed to the plan, along with the 45 million US dollar.
Okay,
So,
so there's cash
so
and hash.
that's correct.
We got a money laundering operation here. We've got some
Yeah,
hash,
yeah, yeah. No,
45 million of hash.
the hash token is back in the contribution. That's what I want to say. We cannot let this happen. This is crazy. They want to pump the hash token with this operation to cash out. Reminder figure is the majority holder of hash token. Yeah, anybody has PTSD on that? That's
Yeah,
it.
they can put some hash rather than hash token in, maybe.
Okay. Okay, thank you, Simon. Thank you to everyone. Bye-bye.
Thank you, Nati.
Thank you. I didn't say that, by the way.
So in the interest of time, as I have so many people in queue, if you can please limit your questions to one, and then if you want to ask another question, please request again. I just want to make sure I get through everyone. Next we have Helix and then JK. Helix Level, are you there? Okay, I'll go on to JK.
Hey, what's up, guys?
Hey.
Hey, JK.
So I had a thought. This has been thrown around a little. First off, I'll just say I don't think this plan is good at all. There's absolutely no risk for these people, and they get all the upside. And we wouldn't get anything other than equity in the NewCo. Nothing with figure, nothing with provenance, and all that stuff. So anyway, that's my thought on that. It's just I think it's a really bad plan. So that brings me to this idea has been talked about before. We are owed a lot of money, and we have with Equities First. We have a lot of money that's owed to us, and we're getting $5 million into the company every month. And these people are bringing $45 million to the table, whatever it may be. And I bet these guys are fully capable in their, they have good experience and all that stuff, and they're smart people, and they can do finance, like they always have. They're just really good at their job, I'm sure. But this is a proof of concept that we're dealing with, and we're going to be the guinea pig. So my question is, what are the chances, or what do you think of the idea that we can renegotiate a $350 million loan with Equities First? We can even have another bank buy it out during the negotiation and say, hey, listen, you can buy this $350 million loan, and we can renegotiate for $300 million, and maybe another bank is willing to do that. I'm sure they would be, saving that much money and getting whatever they have on top, and work from there, and go with a plan that makes sense for the company and the creditors. I mean, if you have that money and you can get that either up front or a large portion, none of this is necessary. There's got to be something that'll have to be planned out in terms of a company, but in terms of that, the working capital would be available to do whatever we need, for the most part. And then that doesn't even include the other stuff that's coming back, like the tether loan and what have you, and any kind of lawsuits with Jason Stone and stuff like that. So I don't understand why that money can't be brought back in and used for that purpose, especially the money that is directly owed to us, which we're already being paid $5 million a month for. And, have that, let's say you just settle for $275 million with Equities First to negotiate a new loan or transfer it. I just don't understand why that couldn't be possible. And I think that's something that should be talked about.
Yeah, cool. So, I mean, yeah, if that could happen, then they should absolutely do it. Getting the money up front in an environment like today. My understanding is that Equities First is just another institutional loan that had pretty bad risk management, where they essentially forgot to hedge the Bitcoin and ETH and got themselves in shit. So they may also be a distressed company. Interestingly, Equities First, I haven't actually looked at it. They might be one of those companies that does have the licenses needed in the bidding process. What Joe was asking.
Right. We can buy them out, not buy them out, but we could,
Yeah.
There could be so much that happens here with a reverse
But
deal or
that's
reverse
what
negotiation.
that's essentially what SBF was trying to do. He was trying to acquire to manage his distressed debt and stuff.
Well, there you go. He's never done anything wrong.
Yeah, I'm not trying to put Equities First in the same category. But yeah, I mean, if we could, I think we would. My guess is that they can't afford it, and they probably. Is that 5 million coming in? I think they just stopped servicing, and but that's part of the business plan is to reinstate those institutional loans.
It was before. I thought it was coming in, currently, but I could be wrong about that. I'm not sure, but that was my impression was 5 million because it was already discussed in the court, I believe, and I don't know if they ruled on it or finished that part up or whatever. But yeah, I mean, double check me on that. But I thought we were getting paid 5 million a month already, and then it was like a $350 million loan. And if you can negotiate and get it off the plate of Equities First and put it in a new bank, have them say, listen, this is what you're going to be paid back or whatever, and they'll get a deal on it. It's one will be absolved of having to deal with that loan, and the other one will be getting a deal. So I don't know, just
yes. So it's one of the institutional loans, and they want to take on the loan book, and it's one of the there's a bunch of other illiquid assets and other things to settle that I assume is all going to go over to NewCo. But yeah, I think
these people have no risk. They're getting all the upside, and they're going to make so much fucking money in the long run. And yeah, we'll have equity in the NewCo, but I don't think that's going to mean too much in the long run. And there's a lot of risk. There's insane amount of risk for us.
Well, I tell you what. Thinking about it, just thinking through it right now, I'd rather be on the other side of Chapter 11 and that get paid because at least we get dividends. Whereas if you put it in the Celsius estate right now, they'd figure out how to spend it on lawyers, I think.
Also true.
Okay, next we have Rob.
Hey, Mary, thanks. So there was a question earlier about, I think the lady came up and asked why she may not be seeing her stuff like withdrawable. So they do have a frequently asked questions because I actually checked this morning as well for myself. And they have an FAQ on there that was posted, I think, February 14th. So happy Valentine's Day. That outlines exactly why people may not be able to see it. And this includes like current employees, former employees, such as myself, which I wasn't aware of. And then there's also the fact that if you had a loan, basically as of 20th December of last year, you're also not eligible to take anything out of custody. So I would just encourage people to go out there and take a look at all the different caveats of why you may not be eligible. Yeah, I just wanted to add that.
Yeah, and to add to that, do check. Don't just take it for granted because I almost had 289 Bitcoin that would have just gone down the drain if someone else wasn't checking.
That's true. That's true. Yeah, that's all I wanted to add in. Again, thanks for everything you guys do.
Thanks, Rob. Stephen Ivan.
Okay, can you hear me?
Yes.
Okay, thanks, Mary and Simon. I'm going to just follow up on a question I had for Tony, and Rob just touched on it. I'm in Earn. I'm also in loans, and during the part around April that Simon mentioned before, when they had to change and Earn into custody, there was a lot of stuff going on. Right around that time, I still had nothing in custody, but I wanted to increase my collateral, so the Bitcoin price was crashing. So it was during the freeze, and I put more Bitcoin collateral into my loan. They helped me. They assisted me manually to do that, even though the wallet was frozen. Somehow I ended up with money in custody. I mean, it's not a lot, but it's under the $7,500 threshold. And I understand what Rob just said, and that was the explanation I had received when I wrote in, why is my name not on the list to get my custody back. But then I think, Tony, you mentioned something just before that. If you can clarify, I'd be so happy. Something, if you said if you had a loan in good standing, then you still could get your custody back if it's below 7,500, or did I misunderstand you? Thank you for answering.
So as of right now, if you have an active loan, they're not allowing you to withdraw your custody that would otherwise be eligible. So part of the settlement with the debtors, with the UCC, is that they're going to waive the loan issue as long as your loan is in good standing. But the settlement first needs to be presented to the judge, which is going to be on the 21st of this month. And then the judge has to approve. And then I think it's like a couple of weeks or so after that is when you'll be able to withdraw. So you got to wait.
So great. If I understand, then there is a possibility that if the judge agrees, if everything goes through as you just said, I will be contacted by email saying, oh, guess what? You can now pull out your custody and go through the process that you outlined earlier. Is that correct?
Yeah. So first they'll contact you because they're going to want you to update your KYC and just, I guess, refresh your whitelisted addresses. And then once it's officially ready, then you'll be able to withdraw. You'll get an email like the people got today.
Thank you so much.
Okay, next we have Andy. Andy Charalambous.
Yeah, can you hear me?
Yes.
Yeah. Hi everyone. Thanks, Mary. Thanks, Simon. My question is around the retail clawbacks and the way the UCC have kind of categorized them. Simon, you hit the nail on the head in your YouTube where you said that they've obviously skewed them very favorably to the smaller people, to basically, I think, for two reasons. One, because they can't justify loads of fees in chasing them. Okay, because they're not going to get much back from the smaller claims. And two, they're kind of making it they're incentivizing them to vote this plan through. Okay, so it's like a bit of a double whammy. Okay, my concern is for the 250 to 1 million bracket, because I feel that group is totally exposed. And, I'm all for going after the insiders. They should go after them with everything they've got. But there's people in that group that, they may have money on earn, so they've taken a hit there. They may have drawn some money out for genuine reasons, and they're much bigger amounts to go after, and the lawyers can justify the kind of fees it would cost to get them. And being in that group, I feel like we're totally exposed. And I was just wondering if you've got any ideas or anything you can push through, because listening to the UCC back in the day, they were so anti retail clawbacks, and all of a sudden they've changed their tune to they've got to do their fiduciary duties and all that, but they're not treating everyone the same, and it's really, really wrong. I can see exactly what they're going to do here. They're not going to go after the small claims because it's not worth the money, and they're going to go after the 250s to 1 millions, which, as I said, there's genuine people in there that have not done anything wrong, and they're going to go after them.
Yeah, there's nothing you said that I disagree with. I think at this stage, it feels somewhat inevitable that this is what the UCC want to do. They want to use it as a tool in order to get the plan through so that everyone can remove their exposure, and then have a litigation trust that, if not set up in the correct way, I think if you do it on a performance basis, then you'd probably have more reasonable, rational decision making. But at the moment, the way it's set up, it feels somewhat inevitable for what they're trying to do. So this then comes over to the defenses and what we're going to be doing as an industry. And I noticed Voyager have also added it into their plan as well. So it looks like this is going to be an industry lawyer-led litigation trust, completely immoral, once in a lifetime lawyer opportunity is what it feels like to me. to make shit tons of money at the expense of some people's lifestyle. I think clawbacks and the definition of clawbacks, I think they're going to be here, and the definition of who and what they're for is going to become really important, because the essence of it still needs to be remembered. That the essence is you had insider information and you unjustly, managed to get you were preferentially treated as a result of that insider information. And so it's going to become a really, really big thing, and everyone should be ready and preparing for how they're going to defend.
Yeah, but if you've had insider information, I totally agree. But there should be,
Correct.
for the people that didn't have insider information, they shouldn't be penalized, especially if they were, started off as earn and reduced their earn to take some money out for whatever reason. They're getting double. It's a double whammy, isn't it? Because if they successfully claim on you, I'm assuming you just have to write a check. You don't actually go back into the higher amount of earn that you originally had. Let's take an example. Say you had 200K and you pulled out 50K. So you've got 150 left in your earn, and they come after you because you're in the 150 to 200 bracket, and say they win and they force you to write a check. Does that mean that you go back up to the 200 and you get the kind of redistribution that you would have had in the first place? Or are you staying at 150 and you've just done 50K writing a check for everyone else's benefit?
All of this is going to need to be clarified, and I don't think we've got enough information in the term sheet to fully understand.
Simon, as a mediator to these people, sorry to cut you off, I really think it's a really important point. I'm sure there's lots of people out there that may or may not be able to speak up, and you're doing an amazing job in getting stuff done. I'd love for you to be able to sort of do whatever you can with this, because I know it's an issue for a lot of people. And it's a really, really bad situation, not just for those people, but the whole industry. Who's going to trust this industry again if people can get away with, if lawyers can get away with clawbacks?
Yeah, well, I'll hand over to Plan C, this perfect segue, but I believe Deb, who is just absolutely awesome, I believe she's going to be on the case, right, Plan C?
Sorry, I want to just finish off by saying Plan C, you're doing an amazing job, and Deb is doing an amazing job, and there should be more people like you fighting the fight. I'm gonna switch off now because I've said enough. But well done. Thank you for hosting me, and Plan C, over to you.
Yeah, thanks, Andy, and just enjoying the conversation today. Another great space you guys are running here, and lots of good topics. So just listening in, but as far as some of the stuff Andy said, I mean. As far as the UCC goes, most people don't realize this, but the UCC and White and Case have been for clawbacks since the infancy of this case. They tried to hide that. They tried to downplay it. They tried to deny it in spaces. They tried to blame it on the judge. They tried to do many things. But since the very beginning, the lawyers saw this as a fee frenzy, and it's very clear. And so I realized that. I talked to different people. Thomas was really helpful in educating me on the risks of clawbacks. Other people I talked to, David Adler and such. So we've had this Telegram group going now for over 7 months, and we've been preparing for this. And the reason why they wanted to downplay things and say, oh, it'll only be over 1 million, it won't be smaller, all these essentially lies and being disingenuous is because they didn't want creditors to organize. I mean, the biggest threat is when people organize, pool the resources together, create a war chest, hire one of the top lawyers and law firms related to securities and safe harbor defenses and all the stuff that we're going to bring forward. So that's what they don't want, and that's what we've already done, and that's what our group continues to do. So I would encourage anyone that has clawback exposure, don't give in to the fear. It's up to every individual has the right to decide what's best for them. Some people will settle. Some people will want to fight it. You got to decide. But if you want to fight it, we have a strong group that is raising a lot of money. And also, I do feel there will be people in the industry that will step up
and also help fund our group, because the word is starting to get out there. And you got guys like Rob from Digital Asset News. This is somebody who is not exposed to clawbacks. He's got a huge YouTube channel, over 300,000 followers. He's not exposed to clawbacks. He actually has a six-figure plus in earn, but he said, if this bid goes through, he just made a post. If clawbacks happen, he will on his channel make a concerted effort to steer people away from the NewCo, and forever, Nova will be attached to clawbacks, and he will make sure that he basically pushes people away from future business in the NewCo. And that's one person, but the word's getting out there. You're starting to see bigger people. Wolf of Wall Street's made a post yesterday about clawbacks. I guarantee over the next month, the word will get out there, and it will become very clear that the industry, this is not good for the crypto industry. This is not good for CeFi and the future of this space. And the only reason why clawbacks are even a conversation is because this was a gray regulated area. In the traditional financial markets, there would be no debate here. You would have safe harbor and things in play, and you need confidence within financial markets. So a lot of people are hurting. A lot of people want more money to come back into the state, even if that means more people are hurt. I get it. The pie, everyone's trying to get the same pie. But yeah, all I would say is if people are not, for people like Andy that are wondering what's going to happen, get in our group, get involved. We host monthly calls with our lawyer. We're very organized. We got a great steering committee, and basically, she will represent all of us, and we're a big part of this is picking off people individually. If you can form a strong group, it's a lot harder. But I'll let other people speak. Sorry, I'm going on and on here.
Simon, did you want to add anything? Because if not, we have Patrick Walden next.
No, I think we can move to the next thing. It's a big battle ahead.
Am I on, Mary?
Hello?
Yes, you are, Patrick. Hello, we can hear you.
Hi there. Thank you to everyone for everything you're doing. I've got it's kind of a simple question, really. I'm just trying to work out where I stand with all this, and I'm not sure has it just come out that if I calculate withdrawal amounts, that deposits are not taken into consideration against these now.
Sorry, what was the question? So you withdrew a bunch and you've got some on the platform, is that correct?
No, so I've got very little left on the platform. I withdrew about 87 days before, but I also deposited some as well. And I'm just trying to work
how much, if you don't mind saying, how much did you withdraw?
I withdrew in total was 107,000 K, and I deposited. That was about just 87 days before, and I've deposited in crypto around about 20K. So I'm at this. I'm just trying to work out what my exposure is.
So
and then I'm reading. Sorry.
Yeah, so if you don't want them to come after you in the existing term sheet, which is not final, and still open to outbidding and negotiation, I believe anyone over 100K, based upon the price of crypto at the petition date, the date of withdrawal. I'm sorry if I'm butchering that one. That's just from memory. Then you can negotiate a 27.5% settlement in order for them not to come after you. And if you've still got 20K on the account, then let's say it's in earn and it gets clipped to 30%. Then they would try and take some of that, and then they take that claim. If it's a 30%, you just have to do the maths. I can't figure out the maths in my head right now, but this is what they're going to be calculating, and those that are the most exposed are the ones that have funds on the app and the ones that withdrew a lot more, because then they can just simply offset the two in the account.
So thank you, Simon. Maybe I didn't make myself clear, but so basically, say I withdrew a total of about 110K, and I deposited 30K in that 90-day period. I've literally got hardly anything left on the platform. Do they take the deposits off of the withdrawal amount?
No, they don't. No. So just to explain this, there's something called a. So I'm not sure exactly how the UCC and this they're going to present this because normally you have something called a new value defense, and so it's all about the order of your transactions. So if your last transaction was a deposit, that gets minus from whatever you withdrew, right? So if you, for example, if you put in 60,000 or whatever within the 90-day window and you withdrew 60,000, your clawback exposure would still be 60,000. I know it's a bad example because it's below 100K. Say it's 150 you put in and then you took out 150. It doesn't equal zero if you did that within the 90 days. That would mean that you have 150 of clawback exposure. Now, if you deposited 150 and your last transaction was a deposit, now you have no clawback exposure. Now you remove that 150. That's what how the new value defense works in my understanding. Obviously not a lawyer, but it's all about the sequence of the transactions, right? Now, I don't know how they're doing it though. If they're just looking at withdrawals, like that's insane. Like that doesn't make any logical sense because if someone was depositing, withdrawing multiple times, and you're going to add up only the withdrawals and say that's their clawback exposure, I mean that's just not how it works. But I mean technically speaking, they can make up whatever they want. I think until this goes to actual like litigation. If they want to make their own criteria for some sort of a settlement, they can do that. But once you start going towards like litigation and stuff, then new value defense absolutely comes into play when it comes to clawback exposure. I think I got that right. I might be wrong. Obviously, talk to a lawyer.
Thank you. Just one quick point on
Celsius is Celsius is very not highly technically advanced, so they just have a spreadsheet. Go figure. There's three columns. One is value brought, value subtracted, and then the net. So your exposure is the net. So in the 90 days, whatever you deposited is on the plus side, whatever you withdrew is on the minus side, and then whatever the difference is of the two, that's your net exposure. That's
Oh, that's how they're doing it, Tony? Oh, wow. Are you sure about that?
I've just seen a tweet from that Celsius network saying Kirkland confirms that clawbacks will only be measured on the total amount of withdrawals. Deposit will not have any impacts. And you screenshotted replies from them.
Yeah, they have a spreadsheet. I've seen it. I don't have access to it, but I have seen it. That's how they're doing it from what I gathered.
Yeah, I would say it seems like there's a lot of confusion around this subject. I don't think we have a straight answer because, yeah, these are all what Tony said, what I said, and whatever who else was speaking said all contradict each other. Yeah. So I would say that we need more clarity on this topic.
Sure.
I don't have clarity. That's the thing. I think they're still trying to figure it out.
And can I ask one more thing about the group, the Plan C group? I mean, I'm in the group.
Yeah, go for it. A lot of people have these questions, so keep.
It's not the Plan C group. Sorry. I'm not even on the steering committee, but
in the group, I know that.
I get enough hate as is. Let's call it the clawback protection.
Because I'd like to I'm against all these clawbacks, of course.
Plan sell. Let's get it right. Plan sell.
The plan sell clawback group.
If I've got a limited amount of funds, if I need to defend myself against this, is it? I'm in the UK, so I'm happy. I mean, to contributing towards the fund for Debbie to work to litigate for us. Would that make sense for someone in the UK?
I can't tell you what makes sense for you, but what I can tell you is the reason why the group was formed is essentially the goal of the group is to get 10x the defense for 100th of the cost per individual, right? That's essentially the essence of the group, right? Because what happens in a lot of these clawback situations is somebody maybe has 100 or 200,000 exposure, and it's going to cost you $100 or $200,000 to defend yourself, right? Yeah, for a full-out defense is even more than that. But we're talking about hiring experts. We're talking about really putting forward all the defenses in the best possible way, and that costs money. That's what it comes down to. And so, as an individual, most people settle or just put the money back because it just doesn't make sense for them from a cost standpoint. Once you start hiring lawyers, even to respond to a letter you get, like one of those letters they'll send out, even to respond to that and whatever, it's the fees add up quickly. So yeah, in my opinion, some people are going to choose to hire their own lawyer for their own specific situations, but for the vast majority, I mean, just my opinion, I think it makes sense to join a group and contribute. And basically, once you contribute, you can follow along. There's updates from the steering committee. You can join calls. You can ask questions directly to our lawyer. So you can be very involved in the process and know what's going on.
Thank you. And thank you to everyone as well for the work, because I just find this is so exhausting for me, and I'm totally overexposed. I can only imagine how everyone feels as well. So just thank you to all of you.
Thank you, Patrick. Next, we have Crypto Ghost.
Hey guys, can you hear me well?
Yes.
Hi, thanks for having me. I actually wanted to follow up on a question that was asked earlier a couple of times already regarding the withdrawals. I went through the FAQ, and I am under the threshold in custody, which was previously transferred from Earn, but I was not eligible for withdrawal. So I was wondering if there's another additional criteria, or maybe they're rolling this out in phases, or if there's another reason that I might not have been included in there, even though I'm under the threshold. And yeah, so thanks.
So the threshold is based on the value at the time of the withdrawal, not the value today or the value at bankruptcy date. So you want to check if it was higher at that time than it is now.
Well,
Bitcoin was like 50K, and it would take a lot less Bitcoin to equal 7,000 versus the amount today.
Yeah, I understand that, but I checked the prices and I was still under the threshold at the time of filing as well. So
did you see if your name was on that list that they provided?
It was not. It was not.
Do you have an active loan?
No, I do not.
Yeah, I'm not sure. You might want to just call and ask, or if you want to email Celsius, it might be the value at the time of the transfer. If you look up the SOFRA report, I think that's the 973 docket. It'll have all of your transfers, and then you can on the farmost right side, it'll have the actual cash value. So you can just add all those up, and you'll have a better idea.
Okay, awesome. Thanks so
much.
much.
I mean, worst case, an email to Celsius, and they can give you a legitimate answer.
Great, thank you.
Thanks, Crypto Ghost. Next is Frank Kashner.
Thank you, Mary, and thank you, Simon, and everyone else who's worked on organizing this. I'm an old union guy and really believe in strength in numbers. I have a question about loans. Can I ask that, or are we still on clawbacks?
Ask away.
Should we bring Ronan up? Can you come up, Ronan? Give us a thumbs up if you can.
Hold on, I gotta log into my alt account. Give me a sec.
I don't see him in the room, but I'll invite him in.
He's here. He's a speaker.
Well, just
ask
the question. Maybe we know the answer.
Okay, so my question is a general question. I've actually had a couple of conversations with David Adler about the loan group, which I will join. But my impression is, I used Bitcoin as collateral, and as some or many of the loan people, I am very partial to Bitcoin and very not partial to Ethereum. But what I'm hearing is that the Bitcoin, for the most part, is all gone. And if we enter into some renegotiated loan, we're going to be doing it against some Ethereum scheme, because Ethereum, in the minds of Nova Wolf or whoever, Ethereum to them is a money-making proposition, while the Bitcoin people, we just want our damn Bitcoin back. Am I right in that?
Yeah, I mean, I'm in the same boat as you.
Yeah, so because Ethereum generates income through proof of stake, that's their mechanism for holding it for 5 years, generating income, and creating a model that they hope will allow them to buy back the Bitcoin at the end of the loan term. So my understanding is you will get your Bitcoin back, but in the 5 years you're exposed to the company going bankrupt and Ethereum significantly underperforming Bitcoin, or the whole proof of stake concept blowing up. So that there's going to be a lot of risks that you're going to be subjected to. And so I think, there's counterparty risk. There's Figure, who I assume is going to be managing the loan. There's Ethereum risk. There's proof of stake risk. There's price risk. There's trading risk. So there is a bunch of risk behind their ability to repay your Bitcoin in 5 years' time.
All right, scares the crap out of me. Thanks.
It's also similar risk that, Celsius and other lenders take with your collateral anyway, because your collateral just doesn't sit there. They rehypothecate it. The only difference here is they're not like selling it to buy something else to hope for a price swing. They're just staking it. I don't know if that makes you feel better. I'm a Bitcoin maxi. It doesn't make me feel good at all. But.
Yeah, no, I'm with you. But thank you for your answers. And thank you for everyone's efforts.
Thank you. Crypto Surfer?
Hello, am I audible?
Yes, you're on.
Yeah. Thank you. Thank you for giving me the time and the floor. First of all, thank you, Simon. It really helps kind of with all the information you're putting out. Really kind of gives us the ability to make sense of the whole situation. Really, I'm an earn. I fall into the earn bucket. I have about a Bitcoin which I sadly deposited maybe a little under a month before they go into bankruptcy, which makes me feel really stupid because I was very cautious before this deposit. Anyway, I'm trying to make sense of the plan, and basically, I understand they are trying to sell us a business, and other than the staking ETH and the loans that we already have, what it is the competitive advantage that we have against established entities of the market? Like, how do we compete with other established companies? And the same thing goes with all the bankruptcies, BlockFi, Voyager. All they try to do some kind to basically come back. So if everyone has the kind of between the lines the same plan, what makes us different? And basically what puts us in kind of a competitive advantage? Because the reason I'm asking this is, how do you make a decision? Do you select to basically return everything in whatever percentage they give us back, or do you select the new company, getting some?
Yeah. So this really is important to come out in a disclosure statement. So the information has been slightly mixed so far, because on the Nova Wharf AMA, they stated that it's an operating company. I saw it more as a fund, and the reason for that is because I think they're just putting a bunch of assets into a fund, and then eventually mining's not going to be profitable, and it will pay out all the Bitcoin, or it will try and reinvest and get additional investment if it's an operating company and it's going for growth. They said they're going for income and growth. And I think they're just going to renegotiate all the retail and institutional loans and then add some ETH staking. And so the potential of all those businesses is the dividends that it can pay, and then whether they actually treat it as an operational business rather than, a long-term managed liquidation through a holding company of sort. I still don't know which one it is, and I've got a bit of conflicting information, so I'd need a disclosure statement so I could really make that understanding. So that's why, the future potential in terms of competing, the only thing that really matters, there's no competition in ETH staking because they're just taking our ETH and staking it. And if you can't withdraw it, then it's just up to them to decide how much they're going to get a management fee, how much they're going to share with us, and how much they're going to pay a dividend. In terms of the loan side, well, you're forced into a loan. You either take earn or you renegotiate your loan. So, and you're stuck for 5 years. So it's kind of like it's like negotiating with a government monopoly. Or you'll do whatever makes financial sense and you can't go anywhere else. But the area we can compete on is mining. And Bitcoin mining is highly competitive. And the edge that looks most promising is the fact that they negotiated us out as debtors. So they took all of our money and used it in order to grandioso, narcissistic, invest in the biggest ass mining operation where they can only have about 20 of them plugged in at the moment, even though they've got 120,000 rigs, and went nuts on all sorts of negotiations where companies like Core Scientific went into bankruptcy. So they've got to restructure all of that, and that's taken some time. And we still don't really have transparent financials to make an assessment around how competitive they are. But that's all sunk costs. So we're kind of stuck. It's like you invest in a bad deal and then they come back to you and say, reinvest or you lose everything. It's kind of one of those. And unfortunately, that's what happens when you have a bad investment like this. And so what do we compete on? The fact that they will be debt free and should have 120,000 rigs mining. They've got another 100,000 to put up, which is no easy feat. And they're going to wipe out all of the debt because we are the debtors, essentially. They used our money through an intercompany loan. And so hopefully that should generate enough Bitcoin. And what I'd like to see is pay as much of his Bitcoins out before it gets screwed up again. But it's not old management managing anymore. This is new management. But the slightly concerning thing is that TerraWolf got itself into a distress situation, which, to be fair, many miners did. But yeah, so that's what we're assessing, and we have to wait for a full disclosure statement before we can really, decide what's right for us. And that should be coming in the months ahead.
Okay, next up we have Robert Monaco.
Thank you again, Simon, for all you do. Can you hear me okay?
Yes.
Okay, great. I just have a really quick question for Ronan. I just saw, as I was scanning through the loans Telegram group, that so far there's been no changes to the original loan plan in the offer sheet. And I very confidently said that loans is so important to the NewCo that, of course, Ronan and David have all sorts of negotiating levers to work with in terms of improving the terms, especially for aged loan holders like me. I'm 69 now and would like to have some sort of an off ramp. Thank you again.
So they are negotiating.
Yeah, Ronan's. Oh, go.
So they are negotiating with them. They weren't able to come to a agreement in time for this plan. So I think they just put the old plan, and then they can always change it later. Because it's basically
perfect. Thanks a lot.
Basically, just a carbon copy of what they showed last time, pretty much. I think they changed a couple things, but not enough to be meaningful. But that's not going to be the plan that's going to go through. Like they wouldn't.
Yeah, all they added was clarity on the loan to value determining what type of interest rate you pay.
Well, they also added the downside risk. So they're going to convert your collateral to staked ETH. And if your staked ETH outperforms, let's say your loan was originally with Bitcoin collateral. If the ETH outperforms Bitcoin, let's say all of that ETH is sold and Bitcoin is purchased. If you had 1 Bitcoin as collateral and now you purchase 1.5, that extra 0.5 will be split 50-50 between the borrower and the Nova Wolf. And then on the flip side, let's say it underperforms Bitcoin and your 1 Bitcoin collateral is now only, let's say only able to acquire 0.5. So both the borrower and Nova Wolf will eat that difference in the principal value. They need more details, obviously, but it kind of goes both ways, like the one thing that we were worried about. So whatever collateral you get, let's say it's a 50% haircut, you'd also get a similar, I guess, haircut on your principal payment due, which is good. It's a good step.
Thanks, Robert.
Thanks so much.
Next is Raz One.
Hey guys, how you doing? Thank you. I just want to send a thanks out to everybody. I'm pretty much stuck in every category, and I guess my question is there some sort of centralized place where us creditors could go to see all these groups and contribute, whether it be money wise or time wise? Because it seems like I have to do a lot of navigating through Twitter and Slack and Discords and so, have you guys thought about maybe getting these like the top people together to put some sort of like repository where like we can go and see I guess find all these groups and find a way to contribute? That's all I got. Thanks.
Yeah, I think Mary tried to do that at one stage, and it was moving so fast that I think no one could keep up. Yeah, it's a bit chaotic, I understand.
Very much so. Next up, we have non-locality guy.
Yes, hi. So my background is idiosyncratic risk and helping trade out of illiquid security structures. So I have a kind of unique lens in looking at this, and for my own continuing education purposes, I've followed this thing for some time. Just to give everybody kind of this broad brush thought on this, I think to Simon's point, it's very important to identify very clearly in the disclosure whether this is a fund or an operating company, some sort of holdco. Because in my mind, this looks very similar to a Cayman master feeder structure for a relative value kind of credit fund. And those have been around a long time, and we understand structurally kind of what those look like. So when we think about typically what a relative value credit fund looks like, target returns are typically 10 to 12% per annum, Sharpe ratio of about 1.5. You typically see, usually these structures are funded, seeded initially by a bank, for example. There's problems with that because of the Volcker rule. The bank has to actually get their money back at some point, 3-4 years down the road. But this is obviously unique. This is an asset manager, so some of those kind of constraints around the Volcker rule don't exist, I don't think. But there is a liquidity aspect to these funds that is very important to understand, that typically it's set up, structured in a way so that you have cash equivalents, you have financing activity or financing availability. Those type of categories are typically looked at as being in that liquid bucket. And usually a manager will keep 20 to 30% of NAV in cash. So that available. So understanding the liquidity structure of this is super important. And I understand why that's complicated and not typical, obviously because of the underlying. But to try and push, because this is a pay to play structure. I mean, this typically doesn't happen what we're seeing in markets. You don't typically post 45 million bucks for $1.5 billion or $2 billion in NAV, whatever it may be. So I think it's important when people look at this and how to really model it and understand it, somebody needs to go out there and look at other credit relative value funds and get an idea how they're structured and say, okay, here are the gaps. Here are the attributes that are missing. Liquidity. What are the gating provisions? I mean, that stuff is really hard to kind of come out with, but this is the stuff that's important. The buyer of last resort typically is associated with the liquidity gating provisions, and that's a board level stuff, and I get the complications, but point is, it needs to be looked at. The other important thing I haven't heard diddly squat about is leverage. What's the leverage profile of this? How does the investment process work? These guys haven't managed any digital assets, it appears, in the past. So who's building that investment policy? The board, obviously will be doing that. But I mean, what are the general thoughts from the manager at this point? A number of structures around this, but leverage and liquidity are two big ones.
Awesome. Thank you very much for sharing your experience. They are going to be appointing 7 board members, so if you fancy a new job, you might want to apply.
Absolutely. Thank
You
you
got
so
my
much for
vote
coming.
just off of what you said right there.
Yeah.
So.
Yeah. Thank you so much. Steve G. Steve, are you there? Okay. I'm going to move on to H.I. McDonough.
Yes, thank you, Mary. I joined the chat late, so I apologize if my question's redundant. It's a clawback question. I'm trying to make some sense out of it, out of the proposal here. I had 4 assets on Celsius that I had moved over from the earn into custody and withdrew throughout the course of May. Of course, not with any kind of insider knowledge, but I guess my question is, my amount totaled up to just, basically equivalent of a venti Starbucks coffee over that $100,000 level. So my question is this proposed 27.5 applied to the entire balance if you're over that threshold, or just the amount that's over 100,000? Or is it if you do, obviously, go ahead. I'm sorry.
Oh, the entire amount, unfortunately.
Okay.
And the reason for that is because if they only did the amount over the 100,000, it wouldn't make sense. You'd have to increase you'd have to make the threshold like higher, right? So yeah, it's just unfortunate that these lines in the sand are drawn. It's the same thing you could say about the 90 days. Like, what about the person that was 91 days versus somebody that was 89 days, right? It's just, unfortunately, when you make a line in the sand, you're going to have people that are just above and just under, and it's just dumb luck.
Yeah, that's an expensive. Use the example of a person that took out 99,999, 99 cents, compared to a person that took out just 1 penny more. All of a sudden, they got to cut a check for 27.5. So, it seems to me like it would be a window. Like if you're below that, nothing. Then if you fall in this window, you pay that percentage. But all right, well, I appreciate.
I mean, I would, if you're really like just over that 100,000, like, I mean, I would. If I was in your shoes, I'd still be fighting and seeing if there's anything to be done. But yeah, I mean, there might not be. But if you're really close, then yeah, just fight it, I guess, as best you can, and see if you can get in contact with people when the time comes.
Okay, thank you.
Thank you. Next up is Orpheus.
Yeah, guys, thanks. Just a little bit of feedback, and I just read some information saying that they said that they have a fiduciary duty for the 87% of people that didn't withdraw off the platform when it comes to clawbacks or retail clawbacks. And I for one saw the markets crashing. Didn't take a genius to recognize that Celsius most likely had exposure to a lot of these markets and entities that were crashing, because I mean the crypto space is just small in general. And I was aware of clawbacks in the bankruptcy code, so kind of just decided like, look, let's go with what's there, and we're all in it together and see what happens. And now I'm hearing from people that they're ready to basically burn down the building if clawbacks happen, steer additional people away from NewCo, and create further damage, and really just sink the whole ship. I'm not quite sure how that differs from the people that are actually promoting clawbacks, when those that are in the position to be clawed back are basically all for themselves as well. Kind of takes away the platform from which to speak on. So, I understand that this is a hot topic, and interests in certain areas are aligned and in other areas. but I'm not quite sure what the wisdom towards having people like the Wolf of All Streets or Ben Armstrong, like that's his name, or some of these other self-proclaimed Twitter martyrs, you know, destroying whatever NewCo and any type of potential recovery we have. I'm not quite sure what the logic behind that would be. And also that kind of rhetoric, for someone who was neutral initially, recognize the situation. Now, obviously, I'm not saying that I am, but I can see how people on the other side might be pushed towards holding steadfast into that clawback situation and losing any type of remorse or empathy or compassion for those that are in a clawback situation. So, just if anybody has any type of response to that, or can provide some insight as to why those types of discussions are even happening in terms of their steadfastness to sinking the entire ship. And I'm talking about
Well,
those that are potentially exposed to clawbacks. Thank you.
well, yeah. First of all, I would say that the reason why there's money, the reason why people that have money in the app, which I'm one of those people, I left half my net worth on the app. The reason why people have money in the app and that there's a hole is not because of people that withdrew, right? Let's make that very clear. This is because of the C-suite and Celsius's poor investment decisions. It's not because people took the money out for various reasons, right? So, yeah, it's a very hot topic. Everyone has the right to come up on stage and give their opinions. People on different sides of the fence are by nature going to have different opinions because of their exposure. We're all just representing ourselves and what's best for everyone. I mean, at the end of the day, my point of talking earlier was just to say there is going to be a blowback from this. I'm not saying there's people within the industry like a good example is Digital Asset News. So he actually, in theory, maybe he would benefit if there was some sort of a clawback from rough justice. Maybe not. But he's got all his money in the app. But he still recognizes how bad a clawback will be for the CeFi space and the adoption of crypto. So he's against it, and he's using his platform to make that clear, which everyone has the right to do, right? So I'm just saying there's going to be all sorts of reactions to this. I think someone should mute. Someone's got a lot of background noise there. But yeah, I mean, everyone's gonna have different opinions on this topic. It's a hot topic, but there will be blowback. There's a ton of people in the space that have big platforms that are not yet aware of this. Oh, go ahead. Yeah, go ahead.
Yeah. If I could just interject, I understand the blowback, but FTX is doing clawbacks. Voyager is doing clawbacks. The damage is already done in terms of this grand vision of protecting CeFi. So I'm not quite sure where that argument holds ground. I mean, these are the biggest CeFi players in the space. They're doing clawbacks. The damage is done. If
No. Just because they announce clawbacks doesn't mean clawbacks are going to happen. I mean, there's obviously defenses, and there's obviously going to be a battle. Like, just because they say they're going to do it doesn't mean it's going to happen. That's not how it works, right? And it doesn't mean it's right. It doesn't mean it should be happening if there weren't things in place like safe harbor that exists in the traditional financial markets. So,
right.
I don't know.
But but then there's the 90-day. I would see more to this if there was like a 2-year, 1 year, 6-month period of clawback. But to keep it within a 90-day period and then to scale it the way that they did, trying to really provide some degree of justice, I think warrants some type of praise to some degree. It's not a full, it's not like they're opening the floodgates and going after everyone that ever withdrew anything off of Celsius. And the entire industry,
but they're doing that because they're doing that. Yeah, I know, but they're doing that because they want to get the vote. You understand the motivations. It's not altruistic. They're doing the structuring of the different tiers. That's solely so they can get more votes. They're making people vote for the plan, right? They're trying to cram it down. And there's no logic in going after people on 100,000 anyways. I would argue there's no logic in going after somebody that took out even just over 100,000 that's international. Good luck. Like, what's the recovery going to be on going after someone international that's low 6 figures? It's going to be extremely low. So it's not financially viable. That's why they're not doing it. They're not doing it out of the goodness of their heart. If the lawyers could get every last dollar, they would. And
I
they,
understand that, but you got to also understand that they've looked at every single account and they're looking at the leverage play on how much they don't have to claw back because people who they're going after actually have assets on the platform. They've done the math. I understand that the attorneys want money, but they've also done the math to where they recognize that the value, this is why they would put it forward, from my understanding of having spoken to people in the field, they have all the information they need. They've already calculated what the likelihood of guaranteed return is based off of people that did withdraw off the platform, but have remaining assets. And then, of course, there's an algorithm that they've designed for what the potential of receiving the clawbacks are from people that have removed all the assets off the platform. And once they have an actual number or something that's somewhat specific, they use that in their effort to move forward and then decide that clawbacks will occur. That's from the information that I've received. I could be totally wrong.
no,
But there
I
is
agree with
some
you.
rhyme. There
I
is some
agree with
rhyme
you.
to reason. They don't just want to harm everyone. And I'll tell you something. The attorneys that are playing in this game, they risk their reputation getting completely slaughtered and ruined, which is already happening to a great degree in terms of what their fees are. But I'll tell you something as well. These attorneys work extremely hard and deal with a lot of BS all the time. They get threats against their families. They get threats against themselves. This is not a position that they necessarily want to be in, but it's one that they're in, and they try to do the best job equitably that they can. And of course, they're going to get paid for what they got, for their efforts and their expertise. You know, if you took a firm, if you took a firm that was not well known and didn't have the insight in terms of how the system worked, we would probably be in bankruptcy for 3 years, 3.5
Yeah,
to 4 years.
we're gonna have to disagree on this. Agree to
So
disagree. I mean, some of
I'm
these
just
lawyers are
saying,
making close to
I
$200,
know,
$2,000 an hour, and
right.
I disagree. But okay,
Let me
Orpheus.
I just want to make one last point. Just to write a letter from an unknown lawyer, which takes about 15 to 20 minutes, is $1,500. Put that into perspective. If they're charging $2,000 an hour to help an estate that's worth about 4.5 to 5 billion, think
yeah,
about that.
I don't
That's
know.
a
I
that's
don't know. Yeah, okay, yeah, that's great. Yeah, I mean, you can have your opinions. I agree with you that they made a very calculated decision. I don't disagree. I mean, I'm sure there was a lot of thought that went into the specifics of these thresholds and everything. It is calculated, but I do think they're also missing some key things because they do not understand this industry. They're just looking at it, and they don't understand crypto. And that's where they don't understand the damage that's going to move forward with this NewCo. And that's all I'm trying
but
to highlight. But we can
I
move on. I think
understand.
other people, you
But wait,
only
Okay.
have the last, no, go for
but
the
what
last
does
word.
noble
We're gonna.
Go
again?
for it.
Sorry, what does
Let, let,
noble
let,
have to
let
do
him
with
have the
this?
last word and then
Yeah,
I'll,
what does noble have to do with this if it's Celsius's decision to do this, and then we're ultimately attacking the NewCo? I'm just curious about that logic.
It's not about attacking the NewCo. The NewCo has, they just need to understand what their situation is. It's not about attacking them. It's about educating them to understand that they will be linked to clawbacks because they have leverage in this. They don't have to accept the deal. They can negotiate. They have power. You know, they have to understand that they're literally going to be suing their customer base. Like a huge percentage of the people that are in my clawback group are creditors. They have money still on the app. You're suing your future customers. So it's education. That's all it is. I mean, everyone's going to do things in their different ways, and I don't condone specific YouTubers' actions. All I know is there will be blowback from this, and that's just a fact. It will affect the equity value of the NewCo. I don't know how you can think otherwise.
I agree, and I
Okay.
appreciate your response. I'm neither way. I'm neither for or against. I just want to understand the logic to some of these arguments that could further divide a community that I'm a part of. That's all. So thank you.
Thank you, Orpheus. We hear you, and all your points are very valid. So in the interest of the other people, I'm just going to give them some time to ask their questions. But yeah, we hear you. Thank you so much. Michael S. Michael S., can you hear me? Okay, I'm going to move on to Sol Hodler.
Hi, yes. Thank you for providing the space for us. Just have a quick question regarding the timing of clawback versus I guess dirty custody withdrawal. say someone that has like, part of their holding still on Celsius while having, a portion of the holding withdrawn in the past. How would the clawback work in this case? Like, would they, I understand that they might go with a soft clawback approach. They just basically, offset, the money that you, or the money that you have still on the account from the amount that they're trying to, claw back from you. But is there a scenario where, they disperse the dirty custody back first and then try to claw back? Or how does that like procedurally work? Like, which one happens first? Or like, does clawback and the disbursement of custody account happen concurrently? Or was kind of wondering what you guys' thoughts on that.
Yeah, we don't know, but my guess is they're not going to allow anyone to withdraw any money if they've got clawback exposure and they want to resolve all that first. They won't let money leave the app if they think they can claw it back. That's my guess.
Got it. Yeah. That makes sense. Thank you,
What
Simon.
was the question? All I heard was something custody.
Yeah, so question is about the timing of like clawback versus dirty custody withdrawal. So are they happening like concurrently? Or, say, would there be a scenario where they allow dirty custody to be, dispersed and then they go with the clawback? Like, just kind of, trying to understand the timing.
Well, the transfer custody will be able to withdraw first. So assuming the judge okays the settlement, at the time of approval, you get the first payout, and then you'll get the second payout. Let's just assume the plan moves forward. So you'll get both of those payouts, and then afterwards, after we're out of bankruptcy, that's when the clawbacks start to come. So if at that point you're not within the clawback realm, you'll get the remaining 27.5%. And if you are eligible to be clawed back, then you would forgo the 27.5%. So that's why we should wait, so you can get your money first, and then, depending on what happens with clawbacks, you might be able to get the rest.
Got it. Thank you for that insight, Tony.
Yeah.
Thank you, so Oliver. Next, we have Xavier.
Hello, everybody. Thanks, Simon and Mary, for hosting this. Really appreciate it. A lot of information. But one thing I'm just curious about, because I haven't seen a lot about it, is I know there's been a lot of conversation on callbacks and everything. Has anything been said about the people that made a deposit, like myself? I made about a 20 grand deposit within 45 days of the accounts being, the account being frozen. Is there anything in that particular case about, folks that made a deposit? I mean, it's kind of the same concept, right? Callbacks because of reasons that have been spoken about, but the company was insolvent, right, for a while. So I'm just wondering, people that made deposits during that time, if there's any.
I'm kind of surprised. I don't know. I'll let Simon give his answer, but I'm kind of surprised nobody created an ad hoc for people that were in. I don't know what the word would be again. It's like induced into to joining right before the bankruptcy, right? Like
Right.
Some of the words said by the CEO on his roadshow on YouTube, like some of the stuff he said was just straight up lies. And he also posted some stuff on Twitter to try and literally induce people, plus, phoning Simon and trying to get him to put more of his people in. So there was inducement into Celsius within that. I don't know what the time period would be, but definitely the weeks before. And if I was in that category of depositing large amounts right before, I mean, I would have created an ad hoc and someone should have done that, but no one has. So I don't know what to tell you. Maybe Simon has some thoughts.
Yeah, I think you covered it really. That it's a one-way street here. So clawbacks are them suing you, and if you feel like you were unjust, then they're currently in Chapter 11 protection, and you need to launch your own class action lawsuit or something, or countersue. But yeah, they're not going to say these people deposited unfairly, therefore they're offset against any issues of clawbacks and stuff, unfortunately.
Yeah, like there's nothing hard coded in a bankruptcy as far as I understand, like the clawback 90-day
you,
thing.
Xavier. Next.
Oh, go ahead. Oh, sorry, Mary.
I'm sorry.
Oh, I don't think Mary can hear me, but all I said was, yeah, there's nothing, just to wrap this up, there's nothing that says, like, you know, with clawbacks, it's the 90 days. There's nothing that says specific time frame for people that deposited. But yeah, I think it would come down to, like Simon already mentioned, putting together a group that, you know, put in a good size amount of money before and getting all the evidence to show that you guys were induced. And, you know, if they're insolvent and different things, you'd have to file a lawsuit, and maybe that would be after Chapter 11. So, but yeah, sorry about your situation.
I can't hear Mary at the moment. Is anyone else got a... Who's next?
Yeah. Hi, it's Darren. I think she's got me up next. Abracadabra.
Okay, hey Darren.
Hi. Couple of things, if I may just take a couple of moments, and I'll try not to waffle too much. The first thing I would say, this Orpheus guy that was talking about retail clawbacks is okay. I think going back to what Plan C was saying, it depends on your position within this whole scenario. I'm not going to replay everything that he said, but all I would say on the subject is we know, all of us that have been on most of these calls, that there are people in this group that are going to be clawed back for basically all of the money or a very large percentage of their retirement funds, and it could actually ruin someone's life, and it will ruin lots of people's lives. And I think personally that if it was his parents that were being clawed back, I think his view on this whole subject would be very different. That's all I would say on that. Number two, I was listening, Simon, to CTO Larson. He interviewed Deborah, and Plan C, I'm sure you listened to some of that as well. This clawback scenario, I don't know if everyone is aware, and I stand to be corrected, but this clawback scenario isn't just about us or Voyager or BlockFi or any of these guys. It will also impact all of the exchanges as well. So what she was saying was, and again, this is my interpretation of what she was saying, even if you put your money on a platform and you buy some Bitcoin or ETH or whatever it is, and you take it back off the platform and you stick it on your own hard wallet, if that platform goes down and goes into Chapter 11 within 90 days, you could be subject to clawbacks because they are not FDIC insured, and the regulations are not there to protect users that are using exchanges, and there is no safe harbor. So for those people that think that this is just a Celsius or Voyager or BlockFi issue, it's not. It's a whole crypto issue. So for the people that are saying, yes, rah, 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 go for clawbacks, God forbid you ever go onto an exchange and you buy some assets, and then that exchange goes down and you've already taken it off and put it onto your hardware ledger. God forbid you do that within 90 days and you end up getting clawed back, because this is what we're all talking about, right? So this is really, really important. This is not just about us, and it's a much, much, much bigger issue. Okay.
Yeah, not your keys, not your coins, up until 90 days after you withdraw from an exchange. The not your keys, not your coins doesn't take an effect until it's within 90 days after getting off one of these exchanges. Sorry to interrupt, I'll let you finish, but Deborah basically, she highlighted in that interview why safe harbor exists. She didn't say safe harbor won't exist, because that'll be one of the major battles with all these clawback situations. She just said the reason why safe harbor does exist in the traditional financial markets is because you could have zero certainty without it. Like, how could you trade within financial markets if you had to wait 90 days to make your next move because you didn't know if there would be a clawback? Like, it just, financial markets literally could not function, and the frequency of movement of money within financial markets makes it so you need safe harbor to be at play for those markets to actually work properly and function. And all she was saying was, this industry is so nascent that it's just undetermined at this point how things will be put in place. So that's it. That's all I would say. But you're absolutely right, and I should let you finish. I interrupted. Sorry.
Yeah, no, that's fine. So the other thing is well, I think, well, I won't talk about the clawback thing anymore. I think everyone's kind of done that one to death, at least for now. Simon, one of the things that I haven't heard, it's been touched on a number of different calls, but hasn't really gone into any detail. And that is, we've spent an inordinate amount of time, which is fine, talking about this deal, that deal, what's the issue with the deal, let's find a solution for this, that, and the other. What I'm not hearing is anybody, to your knowledge, working on a scenario where no deal is viable, and therefore we can agree as a community that the assets get sold over an OTC desk over whatever period of time, and we just get our money back. Because all of this, you know, we're gonna get potentially 20% back, which is not really 20% if you get also getting clawed back, but you're gonna get 20% back. You're gonna put 20 to 30% of your assets into a extremely high risk new company that has never done anything like this before, and we've already lost, you know, circa, once you get your 20% back, you're sitting there holding your hands and crossing your fingers and your toes that you may or may not see the 80% back. And even in your risk profile, and no asset manager would ever put more than 5% of their assets into anything. And yet we're being forced into a scenario where, you know, most of our assets are going to be on some new platform. Is there a scenario, just going back to my question, is there a scenario or is work being done on a plan where if no deal can be agreed upon, that the assets can be sold and we get 47 or 50, you know, 47, I think it is, % of our total back? Because that's what I believe was discussed last week, that's available to us today if they were to hand it back from last week's or the week prior's coin report.
Yeah, absolutely, and it's a really good point. I do know firsthand that there are some people high up in Celsius that would prefer a well thought out, you know, timed liquidation. One of the challenges is regulatory issues. So, you know, you can have, just like you can have a litigation trust, you can have a liquidating trust. And if we were to do something like that, you just have to consider, like, that would be the scenario where you could just sell off the loan book to a company like Abra, and maybe you don't, you know, there's going to be a lot, there's a lot of challenges there. But yeah, if we were to do that, then my preference would be that we sell everything for Bitcoin and not dollars. And I think it should be planned that there is a scenario where just selling everything for Bitcoin could outperform taking more risk and doing a reorg. And I think it is something that seriously should be considered. I know there's many very rational creditors that are thinking like that, like Repeat, who's been an advocate for a Chapter 7 liquidation very rationally for quite some time, and it's from if we talk about in a position so yeah, it is something to be considered, and I think the way that the planned reorg is designed is the investment bank has to present a case of how it outperforms a liquidation is the requirement for a reorg plan being signed off. So that analysis does have to be performed. It's a tricky one to perform though.
Yeah, well, I mean, that's great, and hopefully someone who's going to start working that, because as you know, more than anybody, because you're literally at the coalface of this with Kirkland, Ellis and others, we're running out of time. So I don't know if it's something that you can bring up in your next ad hoc meeting, or if someone can take lead of this, because someone really does need to sit down and work this out. And maybe one of the routes around some of these issues, at least in part anyway, is rather than selling off all of the assets for Bitcoin, which I don't fundamentally have an issue with, but as I understand it, there's a lot of potential tax implications around that as well. So
that's
if
the
we've
big
got
issue. It's
so,
clawbacks and tax. Like clawbacks was,
yeah,
but
but if
now
we've got
we're getting clawbacks in a reorg anyway.
Yeah, exactly. So, but if we've got the platform, you know, the Celsius platform potentially, just let people withdraw. whatever their original assets were, and they get so if you've got Matic, you get a haircut on your Matic. If you've got Litecoin, you get a haircut on your Litecoin. That way, those users have not actually sold those assets, and that should help to avoid any tax issues, surely. And then obviously anything where there's a gap, okay, we might need to sell some USDC to buy some additional assets, then fine. But there's more than enough clever people in this group, in this environment, that should be able to come together and to work that out.
Yeah, in a sense, a liquidation is kind of a reorg, because there's a lot of detail to think through in the tax side, in rebalancing, in what currencies are used as the base. It is a reorg in itself. So, and you can control that. It doesn't have to be as crazy as just sell everything and crash the markets. It can be planned well.
Yeah.
And it should be. I think it's a very sensible thing to consider.
How do we get focused on that then, Simon? Because, as I said, you can hear from the discussions that we're having hour after hour after hour, no one's happy with the plan, at least today. And I appreciate there's time to renegotiate and everything else. No one is happy, or very few people, should I say, other than one person's happy with clawbacks, regardless of what the level is, unless it's inside the clawbacks. That's the only thing that I and others, I think, would agree to. And that also, by the way, should be a get out of jail free card for the UCC with respect to their fiduciary duty, right? If they go after inside clawbacks, done. No one's going to say no to that, but most people are probably going to say no to the clawbacks. But anyway, how do we get focused then on the let's sell the assets if there isn't a deal available that everybody's agreeing to?
Yeah, well, I think they are already. So you have to prepare for a liquidation in case the plan doesn't go through. That's. I'll certainly try and shed some more light on that as we progress. I'm going to have to end this space now, and I think we covered a really wide range of topics. So we'll be back next week, and I'm sure if anything happens, there'll be some ad hoc spaces and stuff. Thanks everybody. This is really rubber's hitting the road right now. I'll hopefully be able to deliver some good news for you next week. And make sure you come back here next week and get your voices heard. So thanks to everybody, and sorry if it's dodgy while I'm on a taxi and the AirPods sound weird and everyone's speaking and there's music. But I just wanted to carry it on because I didn't want the conversation to end early. I think there's some really important stuff there. All right, everybody. Thanks, everyone. Mary. Sorry. Thanks, Clancy. Thanks, Tony.
Yeah. Thank you for having me, and thank you, everyone. Sorry we didn't get to you, but make sure you join the next spaces.
Thanks, Mary, for everything.